Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to this overview of setting charge-out rates for professional firms. If you have any questions during this webinar, can you please type your question into the chat box and I will answer your questions later in the webinar. Professionals charge-out rates review. I think it should be an annual event for you to offer to your professional clients. And these could be any sort of service providers, engineers, architects, town planners, quantity surveyors, just to mention a few. Obviously accountants, bookkeeping businesses, business advisors. It's a good idea, I think, to conduct an annual review to determine charge-out rates because the productivity percentage may have changed. The salary may have gone up on someone, or there could have been a change in the on-costs. So the items for consideration are obviously the salaries and the on-costs for each individual person, the working hours, the training and non-chargeable special activities that have been allocated to that person. And they may have changed for this year because of some other activity that the firms ask that person to undertake. What are the overhead costs for the next 12 months? Overhead costs not including any labour on costs because we're taking them into account separately. What's the targeted profit? How much profit does this professional practice want to earn if everything goes according to plan? And all of this information is reflected in the calculation of the calculator, which we're going to show you in a moment, so that you have a schedule of charge-out rates for each individual team member. There's ongoing work that you could look at in all of this activity. Discuss with your clients the benefit of preparation of monthly financial accounts, monthly key performance indicator reports, and analyse the individual performance of the various team members against the original calculations. So my suggestion is that you offer to facilitate a monthly business review meeting with your client to consider the financial results and also to look at possible amendments to the charge-out rates to reflect what happened the previous month, some of the changes that may have occurred that hadn't been correctly taken into account in setting the charge-out rates. This gives greater control to the client over what is happening in their business and enables remedial action to be implemented promptly, not in 12, 14, 15 months' time, but within 4 to 5 weeks of the start of a month. Changes could be looked at because, we forgot that we've allowed Bill to have a special week of preparation for another assignment for the next 6 months. We forgot to factor that into the original calculations, and these things do happen. So let's now go and have a look at the overview of this product package, the Professional Charge-Out Rate Calculator. So on the screen now, you have the professional fees calculator that's been developed by ESS BIZTOOLS. You would indicate in here the name of your firm. You're preparing this document for your client, and your client's name and the date. And then the client's name and the date of preparation will come up on each page throughout the system. There's a set of instructions which takes you through this process. And we're going to have a look at these 12 section headings today to give you an overview of how this process is approached. And then we got some commentary on each of the individual calculation that's going to be made. Okay, so let's go to calculation of on costs first of all. Now we've divided this into segments. This is the permanent full-time employees. There are 6 of these categories, A1 to A6, and each of them have got 6 positions that you could complete. So you've got 36 in total. Now what we're trying to do here is to group according to the A1, A2, A3, etc. classifications, whether their on costs are the same. Doesn't matter about who the position is, you type the position in there and you then enter the details. So if someone's got the same annual leave, they may or may not get a shift worker allowance, but everyone in this group should have the same. The same with statutory holidays, personal leave. The superannuation rate should be the same. The big variable could be training. Everyone that's in A1 needs to have the same training days. And obviously long service leave will be linked to the state that they're in. And the system will then do these calculations. And then these calculations will be reflected in the labour budget, which follows. So if you've got some people in the team that have got slightly different superannuation or have got different training allowances, you'd move into A2. And if there's some of those that still are different, we go into A3 and so on. We got through to A6. So I think there's plenty of room to do that. And there's A4, A5, A6 there. So that's the whole idea of that. So you're able to really personalize the individual people because you're getting, first of all, their on costs correctly reflected. Then we have the permanent part-time employees. It's the same approach. You have within each of these groups, the people who have got identical on-cost arrangements. And there's 6 of those sections. And then we move into the casual staff. And basically, it's the same approach again. There are 6 components there, 6 sections for you to fill in. You don't have to fill them all in, of course. You only fill in those sections if you have people that are receiving those types of benefits. The system will then take us through to the labour budget. So you have to complete what is in the yellow columns. The remainder is automatically transferred from the on-cost calculation or is calculated within the labour budget. So the system will transfer in the order that they're recorded in A1, and the on-costs will record the details as to the classification. You insert the number of individuals in the individual gross salary. So the system then calculates the total gross salary. The labour on-cost percentage is transferred from the labour on-cost segment, calculation of labour on-costs. It will calculate the individual employment costs and the total of individual labour costs. Show the individual hours being paid for. The leave is transferred from the on-cost calculation. And then we'll have the individual net hours that are going to be worked. You or whoever is completing this form needs to insert the productivity percentage, and then the remainder is also calculated. The individual targeted hours, which is column 8 times column 9, the total hours paid for, which is 1 times 6, and then the total chargeable hours, which is 1 times 10. And obviously this is what's been sold, the chargeable hours. Every team member should be processed in this way, even if there is no chargeable hours. So in some businesses, there are certain people who are there's no expectation that they will have chargeable hours, so you wouldn't be budgeting for them. So the system, first of all, transfers the permanent full-time staff, and then the permanent part-time employees, and then the casual staff into this category. The system will also calculate the targeted practice productivity percentage, which is calculated by referring to the total figures. You can then insert the return on investment. What do you think the net investment is in this business? $250,000, rate of return 20%. System will calculate 50,000 is your targeted profit. You've then got provision for the budgeted overhead expenses. You can type the expenses in and what they are. The system will total it, and that's the amount that's then going to be utilized within the calculations. The targeted income then that we're trying to achieve out of this business on an overall basis is the total of the labor costs, the targeted profit, which is the figure we just calculated, $50,000, the overhead expenses, whatever they might have been, $500,000. So we've got a total. You can insert a percentage of write-downs if you wish. I hope you don't have to do that. I think accountants should have the courage to charge without budgeting for write-downs. So this is then the total income to be recovered, which is just depending on those figures, isn't it? Calculation of time costs is then a calculation that is conducted to determine a base cost chargeable hours figure to make sure we're going to distribute these costs across all segments. So that happens automatically, and that system will then automatically process to determine a charge out rate for each category, which is obviously based on their salary and the productivity percentage. We have that figure. And then we have the proof of the charge out. So this is reflected in the calculation that we have. And again, the classifications are transferred through from the labor budget. The same reference numbers are used. The hourly charge out rate as per the calculation, the chargeable hours, pardon me, as from the labor budget. And then we will have the total income projected to be earned. And if we total all that through, that figure should then be agreeing to within a few dollars of what we had previously shown in the targeted income as being the income for the year. So we've now shown that by utilizing the charge out rates that we've determined, multiplying it by the projected number of hours that that person is going to charge during the year, that is the income that this practice will earn. And the end result should be that the firm has created a $50,000 profit, because that was the profit we said. Investment $250,000, profitability 20%, $50,000. Now, obviously, you can play with that figure. And if you do, you go back and do the calculation again. So you can undertake some SWOT analysis in this. The key, of course, is making sure the working hours and the productivity percentages are reasonable estimates. And that's all they are. And that's why we're suggesting that on a monthly basis, there should be financial accounts prepared by this business. And there should be key performance indicators prepared each month showing what was the actual hours that each of these persons worked, what was their actual number of hours charged, what was the productivity percentage, and how did it compare to the assumptions that were made in these estimates. Now, if it's found that there are differences, significant differences, it may mean that this calculation exercise needs to be redone so that the firm can attempt to recalibrate the charge out rates that are being implemented from there on. The benefit, instead of waiting 15 or 16 months to find out that this wasn't done correctly or there'd been changes in working processes that resulted in less income being recovered than what was originally projected. Your client's got the opportunity of correcting this within 5 or 6 weeks of the start of a month. So hopefully that problem can be eliminated. So then we got a summary of the budget. The professional fees we've now generated, less any allowances for write-offs. So we got net professional fees. The total labor, including on cost, was whatever the figure we had previously. The gross profit is calculated. The overhead costs as per reference 15. So here's the projected profitability, and that's compared to that targeted figure, which on our assumption would have been $50,000. So your client's got a blueprint of what can be implemented for the year. Make sure the team charge as stickable fees these hours that are listed. Make sure that their productivity percentages are at least what we've used in the budget. And the end result, unless there's been any increase in salary costs or in overhead expenses, should be that this firm has earned $50,000 profit for the year. And that's how it works. We also have the long service leave calculation. Long service leave was one of those overhead expense, on-cost expenses that we looked at. The system will, once you indicate the state that the employee's based in, it will pick up the long service leave, which has been progressively built up. And as you can see there, other than the Northern Territory and South Australia, the others are all on an equivalent of 4.33 days per annum is being accumulated as long service leave. I believe this should be built into all of these costs. I know some people leave and that aren't there to receive long service leave, but it does build up. It is a cost of running a business. And that's how we've provided for it. So that's how the system works relative to the professional service fee charge out rates. I haven't got any questions, so I'm now going to proceed with our discussion on the other matters within this segment. And that is this tools to create opportunities. This is our big promotion in trying to convince you to look at getting started on the delivery of business advisory services. So we got 7 great products. Your investment is only $795. It's an upfront payment. This is based on a 50% discount. So $795, which includes GST. You get 12 months, 24/7 access. This is a great way to introduce business advisory services to your clients. We've gone through and looked at our package and said there's 4 very important packages, which is all part of the fabric of offering the ESS BIZTOOLS business advisory services products. So we've said that these 4 packages are mandatory in each of these promotions, what we're calling the tools to create opportunities product package. So you get the business advisory services training. There's 13 modules, which will help you and your team to have a full appreciation of what's involved in the delivery of business advisory services, which is different from the delivery of annual accounts and tax returns. We also have the Business Plus newsletter, 13 editions. Although next year in 2022, there's going to be 14 because we're producing an edition in January. We normally don't do that. But in 2022 is going to be a big year, I think. Great opportunities for businesses that are at the starting gate, ready to go early in January. So we're producing our newsletters each month, and there's 2 extras during the year. One will be in March next year, and that's going to be our overview of the federal government's budget as it affects SMEs. Normally that's in May, but the government's announced that the budget is going to be brought down in late March. And the other one's in an end of year tax planning document we produce, a newsletter, and that's produced in the last week of May each year. You get 343 papers on 60 different subject headings that you can badge and send to your clients and prospects to educate them. And you get the most important document of all, the SME needs analysis, which is a great tool to start a conversation with your client about what he or she would like additional help on in their business. So you can sit down and have a cup of coffee with them. Now you then get the opportunity of going through and selecting 3 additional products. And we've given you 22 from which to select. There's 32 products in total in ESS BIZTOOLS, so you got a choice of 22 here. There's 5 business health check packages. They're listed on the screen. You can pick one of them if you wish. We then have business planning, charge out rates for tradies, the professional firm charge out rate calculator, which I just showed you. Now, if you've got a number of professional firms, you'll pay for this subscription, $795, no trouble at all in just doing those calculations for your engineers, architects, town planners, solicitors, and making sure that they're on track, comparing then to what they're currently charging and seeing how it works out. The retail wholesale stock mix pricing calculator, which is very important, looking at the different components of stock and the markups that apply. And does the mix enable the business to generate a profit? Buying a business, still a lot of those things happening. Client mentoring and coaching modules, client seminars and webinars. These are key communication channels that accountants can utilize. Crowdsource funding, equity raising. A client with a turnover under $25 million can raise $5 million from the public. There is a process, but we've developed the system and the training to enable you to advise your clients and earn some good fees. Debtors management system, early stage innovation company, capital raising. There are restrictions that apply to these companies. They must be young companies, not the executives or the directors, but the company itself. But they can be very attractive to investors. Government grants, we've got a separate product called ESS Biz Grants. You can subscribe to that to be very proactive in advising your clients of government grants that are available. Leadership modules, there's 8 of them, which goes through the whole process of developing leadership skills. My suggestion is you use this with yourself and the accounting team that's going to be involved in business advisory services as step number 2. Step number 1 is go through the training program. Step number 2 is look at leadership. So you get everyone prepared properly. And you might be able to offer the leadership training to your clients later on. Some of our subscribers do that. The personal property securities register. Do you know all about it? Do your clients know all about it? Do you realize that over $450 million has been lost by Australian businesses, primarily through ignorance of this legislation? And the largest group of losers out of this has been SME business operators. They didn't know. You wouldn't want a client coming into your office tomorrow morning to tell you he's just lost $1 million worth of assets and he knew nothing about the personal property securities register requirements, would you? Selling a business, SME debtors systems manual, succession planning, survival in difficult times. We've had a lot of that in the last 2 years. We will continue to have segments of that around Australia. We still are not out of the woods on this virus yet, but there's always some sort of natural disaster, whether it's floods, droughts, cyclones, bushfires. And there always seems to be pockets of Australia that have selected difficulties. So this package will help you sit down and give your clients some advice, because there's 48 questionnaires looking at the 48 key components of a business. And then we have dovetailed into that 48 articles, which give your client and you and your team some feedback on the ways that the problems that have been identified in the questionnaire can be rectified. It's a great product to use with your clients. Now, if you need more information, or hopefully you want to subscribe, just send us an email, please, peter@essbiztools.com.au, and we will mail you the product package and the subscription form. You just complete that, then you can go to onto our website to do that, and we look forward to welcoming you as a subscriber. We're continuing these webinars next week. Next week is the last week of this series of webinars, where we're going to be looking at, on Tuesday, business planning. That's Tuesday, the 14th of December at 1 p.m. AEST. And on Friday, the 17th of December, we're going to look at buying a business. Now, to register for both of those webinars, please go to our website, www.essbiztools.com.au/webinars. And if you want to contact us, please do so. Send me an email, peter@essbiztools.com.au. If you'd rather talk to me on a telephone, that's great. Please give me a ring, 1-800-232-088. But most of all, I would really like to invite you to visit our new upgraded website, www.essbiztools.com.au. If you're looking for something that you can't find that you think we should be providing as the service provider supplying the Australian accounting industry on business advisory services, please let me know, because that's our motto. We are producing material for you to use to be able to confidently deliver business advisory services to your clients. We are well underway on working on projects, new product packages, which we're going to release next year. 2022 is going to be a great year. This is your opportunity to get ready to be able to deliver outstanding services to your clients. I do look forward to hearing from you. Stay safe and have a great day. Goodbye. And I look forward to talking to you next week when we conclude this webinar series. Have a great day. Goodbye.